the key tax inflation adjustments for 2022. And I'm going to touch on some of those, but not all of them, in this video. My name is Griffin Bridgers, and it's my pleasure to introduce the key tax inflation adjustments for 2022. I talk a lot about tax and estate planning. You can find numerous videos on my YouTube channel. And today is a surface level discussion of some of the key tax adjustments that practitioners should know. As always, I want to remind you that this presentation is provided for educational purposes only and is not intended to substitute for legal or tax advice. So, everything I'll talk about today can be found in Revenue Procedure 2021-45, so I would definitely refer back to that if you'd like to see these and other inflation adjustments listed out. But I want to note that, for one, this presentation is not all-inclusive. I want to hit the high points of what people in the world of individual income tax and estate planning should know. And I want to also note that we're in a flux period. All these adjustments should be effective for tax years that begin in 2022. But, as we all know, there's a lot of congressional action around tax reform that's been happening and may happen before year end. So today it's November 15th. We've got a little more than 6 weeks left in the year. So any congressional reform around revenue initiatives for the Build Back Better Act and infrastructure bills could change what I'm going to talk about today, but under current proposals may not. But either way, don't take this video as gospel. So, without further ado, here are our adjustments. So, our highest tax bracket, over which the 37% rate will kick in, will be $647,850 for joint filers. If you're an unmarried individual or head of household, it bumps down slightly to $539,900. If you're married filing separately, it's one half of the joint filer threshold, $323,925. And finally, for trusts and estates, which have much more highly compressed brackets, the 37% rate will kick in for retained income over $13,450. For capital gains rates, we're going to look at the 0% and the 15% rate threshold. So, 0% capital gains rates apply to total income that equals or is less than the following amounts. For joint filers, the threshold is $83,350. For heads of household, it will be $55,800. Now, for both married individuals filing separately and unmarried individuals, the threshold will be one half of the joint filer threshold, which is $41,675. Then finally, for trusts and estates, the 0% capital gains rate threshold for capital gains that are undistributed or assigned to principal will be $2,800. Similarly, the 15% rate threshold will be $517,200 for joint filers, $488,500 for heads of household, $459,750 for unmarried individuals. For married individuals filing separately, as always, one half of the joint filer threshold, or $258,600, and then for trusts and estates, $13,700. Our standard deductions have also increased for joint filers who don't itemize. For all filers who don't itemize, the standard deduction will be $25,900 for joint, $19,400 for heads of household, $12,950 for unmarried individuals who are not itemizing, and for married individuals filing separately and not itemizing. And then finally, the additional standard deduction for claimed dependents of non-itemizers will be $1,150, or if greater, $400 plus the dependent's earned income for the year. Now we're going to get into the estate, gift, and generation skipping transfer tax adjustments. As we'll see, the basic exclusion, which applies to estate taxes, lifetime gifts, and also is a separate and independent exclusion against the generation skipping transfer tax for both lifetime and transfers at death, has increased. It's up from $11.7 million to now $12,060,000 per individual. Now, I want to asterisk this because this is one of those original proposals that was on the table for the House Ways and Means Committee report, which was introduced about 2 months ago. And for the time being, the version of the Build Back Better Act that was passed by the House about a week ago does not affect this exemption amount. But that's not to say that the Senate couldn't add this back in. So for the time being, I want to note that there is a big asterisk here. Based on prior proposals, there's a chance that maybe this could go down by 1/2 to $6,030,000. But that remains to be seen. Meanwhile, that exclusion for gifts isn't dug into unless you have taxable gifts of either future interest or present interest over a certain threshold. And the present interest threshold for the annual exclusion is now increased from $15,000 per donee to $16,000 per donee for gifts of present interest which are completed in 2022 and beyond. Now, that applies in the case of every donee, but in addition to that, for gifts to a non-citizen spouse, even though there's no gift tax marital deduction available, the superannual exclusion for these types of gifts has increased to $164,000. Now finally, in the case of the Code Section 2032 Cap A adjustment to the value of real estate that's used in a farm or closely held business, the maximum reduction allowed from the value at highest best use to the value at current use has increased to $1,230,000. Once again, if you'd like a reference to these numbers, you can see Revenue Procedure 2021-45. And as always, if you have questions or topic suggestions regarding this material, you can email me at griffin.bridgers@gmail.com with the caveat that I cannot give legal or tax advice in response to your questions. And if you're a practitioner in the areas of tax or estate planning and you'd like to present on this channel or even look at an interview format to promote your business, please also reach out to me. I'm happy to collaborate and open up this channel to other presenters as well. But thank you again for listening. I'm Griffin Bridgers, and I look forward to seeing you in my future content.